A comprehensive look at trends, fund profiles, and more in Exploring ETFs.
ETFs for your IRA. That's what we're going to talk about this time around with our ETF Research Director, Nina Mishra, who joins me here. We're talking here at the end of March as we record this, but it's a timely topic because tax time is right around the corner.
Yes. So April 15th is the deadline to make contributions for your IRA for the 2018 financial year. And if you're still looking for options, here are some good choices that we are going to discuss. So these IRAs allow investors to buy stocks, bonds, mutual funds, and ETFs. ETFs are becoming very popular in IRAs because you can get exposure to the entire market or to a very wide section of the market using one fund. So when you are picking ETFs for your IRA, my suggestion is to look for more broader diversified fund that are less volatile, so they can grow risk free rather with lower risk in your IRA. And also income paying funds that pay dividends or interest on bonds, they are more suitable for IRA because that income is tax sheltered. And when you are investing for retirement for the longer term, always take a look at expense ratios because in the long term costs matter a lot. So that is why I have chosen 3 ETFs which are very, very cheap, among the cheapest in their respective categories. And these funds are from 3 different providers. So depending on the platform that you use, maybe you can get commission-free trading because so many platforms allow commission-free trading on ETFs now. So maybe this ETF will be available for commission-free trading on your platform.
That helps. So ETFs are becoming more popular with investors for this purpose, right? So the first one we're going to take a look at is the iShares Core S&P Total U.S. Stock Market ETF.
Yeah, I like this ETF a lot because it is very, very cheap. Just 3 basis points expense ratio, very popular. The ticker is iTotal, and it provides exposure to the entire U.S. stock market, large cap, mid cap, and small cap stocks. So let's take a look at the quote page for this ETF. It has, as I mentioned, expense ratio of just 3 basis points, which is like very, very cheap. Dividend yield of 1.9%. You can go to the external home page using the link on our quote page on Zacks.com, and it provides exposure to 3,566 stocks.
Wow.
That is the entire investable U.S. stock market in one wrapper. And since it's a market cap weighted ETF, well-known companies like Microsoft, Apple, Amazon, Facebook, Berkshire, these are the top holdings in the ETF.
All right, Schwab has one only focused on large cap, right?
Large cap value stocks.
Okay.
The ticker is SCHV, and I think value ETFs are also great picks for IRA because in the longer term, value stocks have shown that they can outperform the broader market and growth stocks over the longer term. You will recall that when we discussed best performing ETFs of the 10-year bull market, one of the surprising outperformers was a pure value ETF. So these are excellent for long-term holdings in your IRAs. So we can take a look. Schwab Large Cap Value ETF. It provides exposure to large cap stocks that exhibit value characteristics.
U.S. stocks.
U.S. stocks.
Okay.
This is also very cheap, 4 basis points. The dividend yield is about 2.9%, and you can go to the external home page of Schwab's homepage for this ETF, and you can look at other details or the ETF portfolio. So you will see Johnson & Johnson, ExxonMobil, JP Morgan, Procter & Gamble. You will see more stocks from healthcare, energy, consumer staples, financials. Those are the typical value sectors that comprise the top holdings in this ETF.
And then Vanguard has one for people, investors who want to just focus on real estate.
Yes, so REITs are great, again, great picks for IRAs because they pay a high dividend yield. So that is why I think this would be a good pick for the IRA. The ticker is VNQ, and as you know, REITs are companies that own or operate real estate. This is slightly more expensive compared to the other two because this is a little more specialized. It has an expense ratio of 12 basis points, but it is still one of the cheapest, and it is the most popular REIT ETF, so very liquid ETF. So that's why I really like this one. And again, you can go to the quote page, 12 basis points expense ratio, very nice dividend yield. You can also go to the Vanguard web page for this ETF if you want to look at other details, including the portfolio. Now, as far as REITs are concerned, just wanted to quickly add one thing. REITs are slightly rate sensitive. And this year, because rates are falling like a rock. So that is why this ETF has done pretty well this year. But REITs also have lower correlations with other asset classes, other major asset classes. So that's why this could be a good pick for a diversified portfolio. It would add diversification in an equity-focused portfolio. Now looking at details for this ETF, you will see diversified real estate, actually specialized REITs, retail REITs, residential REITs. These are the top sectors in this portfolio, and you can look at the holdings too on this web page.
Okay. Do you own either of these?
So I do own VNQ in the ETF investor portfolio that I manage for our clients.
Okay, thanks for the information. Don't forget, always more ETF information in the funds section and the ETF section of our website, Zacks.com. What I meant to say is use the funds tab in the top toolbar and it'll take you right to it. And also don't forget about Nina's podcast, weekly podcast, ETF Spotlight, where she spotlights other interesting information in the ETF sphere of things. With Nina, I'm Terry Ruffalo.